Welcome back. Joining me for a look at the equity space is Cremen from Adviceworx. Caroline, thanks so much for your time today. So markets kicked off the week on a fantastic note, both locally and globally, but we did start seeing both rallies on both fronts starting to taper out. That started about yesterday, and I want us to start off in the global side. That tech-fueled rally really losing steam, and Nvidia's share price also taking a bit of a knock. Caroline, what's behind markets' exaggerated response to Nvidia? And can you say that the rally was just reliant on what we were seeing play out in Nvidia?
Markets added fear and greed, fear of missing out, and it's just, I think it's a very difficult thing to call at the moment because you're seeing so many positive analyst calls on Nvidia, and if I look at it, it really does look rather overvalued at this point, although I do see enormous growth in the company going forward. So in a strange way, a stock can actually be overvalued and undervalued almost at the same time. But I think when people just look at the metrics of the S&P, I mean, Nvidia is responsible for a great portion of the gain of the S&P 500 over the last month. And if you look at the S&P as a whole, most of the stocks that are listed are actually still at their prices that they were at the end of 2021 before we had the great, inflation implosion. So, it does worry people. There are economic concerns. There are concerns about interest rates and inflation rates. We've talked a lot about the Fed. And then, it's really difficult for any analyst, and even if you follow the industry really closely, to actually see how much the demand for chips is going to grow, or how much it is actually going to be. What is the reality of all of this AI hype? You've already seen a couple of big companies coming out saying, yes, no, it is very nice, we need to have it, but how do you monetize it? And I think the problem is people are probably focusing on one particular company, and again, it's just FOMO. So I think the market is really on a knife edge with this one. So I'd be very, very cautious about putting more money into it right at this point.
Now, another turn of events that took place was here at home. We had the JSE and the Rand really doing good at the beginning of the week. Then we did start seeing that rally tapering off, with the Rand breaking through that 18 Rand mark yet again. But I think the last time I checked, it was around 17.98, 99. Are we seeing the local markets kind of now digesting what's been happening on the local front, considering that GNU hype has sort of died down?
Yeah, I think so. But I think, it's going to be kind of a bit strange for the next few months because, we still need to structure the government. You still need to see that people can actually work together. So I think the Rand is definitely benefiting now. And I think a lot of that benefit will be locked in because it probably was undervalued leading up to the election. So now we've had an election, we've had the ruling party lose its majority, and there's been a peaceful transition. Now that doesn't happen a lot in Africa, certainly. So I think a lot of those gains that Rand has had, I think they can actually kind of keep it. Foreigners are definitely looking at South Africa as a potential investment destination again, and you might start to see, increased and sustained flows. So I think there is room to say it'll probably stay about at this this level, unless there's something really goes wrong with the government of national unity, in which case it's all just going to reverse very, very, very fast. But I think in the months ahead, as long as we can kind of keep things kind of together here in South Africa, the Rand is probably going to be more affected by what happens to the US dollar and inflation rates overseas. So South Africa's had its day. Now we just need to be very quiet.
Just sticking with, what's happening on the political front, reports suggest that Ramaphosa will make his announcement on the cabinet sometime this weekend. Just how much of a market mover could this be, considering that we have a post like public enterprises that's still hanging in the balance?
Look, it might create a market movement one way or the other, but I think whatever way it moves, positively or negatively, depending on who he picks, I think you can discount it because the reality is that it's not necessarily the person at the top that's going to make a great amount of difference over the long term. It's the career executives
Mm,
that you've got already in those in those industries. So they're going to be very difficult to remove if they're bad. It's going to be they're going to be expensive to remove if they have to be removed. And ultimately, it's always what they've already come out and said it's the president's prerogative. So if whatever he announces creates too much political friction with the unions or wherever, he can always reverse that. So I must be honest, I'm not holding out too much hope that we're going to
mhm,
get an enormous bump from that, but it will at least be a step in the right direction. And I think, we need to stop looking at this new regime that we've got here and actually say it's going to make a huge impact to South Africa, but rather that we're going to take incremental steps, hopefully, in the right direction. And I think that's all that South African investors want, and I think that's pretty
mm.
much what foreign investors are expecting.
Caroline, so much to talk about, so little time. Before I let you go, what's your stock pick?
Well, it's going to be something based on the South African bump. It is Standard Bank. It came out with a 5 months trading update. I think it was yesterday, and the performance was okay. They're still, benefiting from the interest rate endowment effect. If there's slightly better credit stats coming out, Standard Bank has always had a very, very strong ROE, and I think with a more favorable those little incremental steps in South Africa,
Mm,
it's definitely going to benefit from it. And I also think as U.S. interest rates and overseas interest rates start to come down, you're going to see our banks, which are hugely cash generative, got a nice yield, actually start to have create a lot more interest amongst foreign investors. So I think they could benefit from that. There's already been a post-election bump, but I
mm.
think it can run further.
Thank you so much for your time and those insights. I hope you have a lovely weekend. That was Caroline Cremen from Adviceworx.